Hey there, it's Ryan Skaggs, and this is the Mortgage Minute. It's the end of July 2021. Thank you so much for tuning in. This channel is dedicated to everything real estate, mortgage, and interest rates, and we're going to talk about those interest rates today. So, where do we see rates going out the rest of the year? Before we go talk about what's going to happen next, let's talk about what's going on today. So check out the link below to the average 30-year fixed according to Freddie Mac. They've got a great chart. We're at 2.80. We're up just slightly over the last week. Really, today the Fed came out and had some big news. So we're really going to talk more about that piece. But 2.8, we're at the almost absolute low over the last 50 years. So check out that link below. While you're down there, hit that like button, hit that subscribe. I put out weekly videos. Click that bell icon to be notified as the content is coming out every single week. Okay, so let's talk about what is going on for the rest of the year. What's out on the horizon? Where do we see it? So I've previously suggested that rates are going to take a little dip and then we're going to slowly start to go back up through the rest of the year. Well, today told me something different. And we're going to talk about what exactly that means with a short video.
The Federal Reserve keeping interest rates in the range of 0 to 1/4%. But on the issue of tapering, the Fed didn't say the words, but saying that the Fed said the economy has made progress towards the goals of substantial further progress, which is the way it assesses whether or not to eventually begin to taper. So it's made progress towards that goal, and saying we'll continue to assess that progress in coming meetings. So that's the
incoming meetings. Incoming meetings. So that's what they're going to talk about. Is they're going to say incoming meetings. We're going to talk about if we're going to taper. Now, what does taper mean? So the Fed is buying mortgage-backed securities. So I, as a loan originator, originate a mortgage, get sold off into the secondary market. Banks do this, brokers do this, mortgage loan originators do this. Anyone kind of does this as a general type of thing. Now, with that said, those go into the secondary market. They're bought as mortgage-backed securities. The Fed is buying those. They are just constantly out there saying, yes, I'll take that. Yes, I'll have one of those. It's like, going through the aisles of the toy store with Oprah and you're just buying anything you want. Yes, I'll take that. Yes, I'll take that. Yes, I'll take that. Throw it all in the cart, right? They're buying every single day, all the time. Now, tapering says, I'm going to slowly start decreasing the amount of mortgage-backed securities that they're buying. Now, they are artificially inflating the demand. The supply is consistent right now because it is a hot market, but they are artificially keeping rates low by continuing to buy. And what that video told us is that they're going to wait for future meetings, which come up every 60 days. Then they release their meeting minutes, and then we see what they've been thinking about, if there's any policy changes. So that basically tells us we're 120 days out if they're in future meetings, plural, before they do anything. So my thought is that we're going to stay low because they're going to keep these rates as low as possible to ensure that appreciation of homes isn't going up too fast. People can continue to still be able to purchase homes. They're not going to be too expensive because keeping those rates low is going to allow for lower payments. So my new hypothesis is they're going to stay at or where they're around at, for the rest of the year. Now, again, just my opinion, but I do think rates are going to stay lower than I maybe previously thought, going into this year of what the Fed would potentially do as we've been coming out of this pandemic. So this is the Mortgage Minute for Ryan Skaggs. Thank you so much for tuning in, and we'll see each other again very, very soon.